Yo, 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 yo! What's going on in the hood? How's everybody doing? Sweet! Everybody have a good week? Jeremy, what's going on, buddy? Rommel, what's going on in the hood? Uh-oh, Kendra in the house. Kendra always causing trouble. Kendra in the house, what's going on? Marvin, what's going on? Mr. Duncan, pleasure as always. Ruckus, what's going on? Simone, how you doing? Carlos, ¿cómo está usted? Good, good, good. Well, awesome. We got things to do. We got things to do. Chris Tran, where have you been the last 5 years? What is going on? Cool. All right, let's get to work. Let's get to work. We got things to do. As they say, we got things to see, people to do. Jason, man, my man. All right, man, let's get to work. First things first, always. What do you want to do on? So, like, whenever you're working on the weekends, Omar, you know what I'm wearing. Whenever you're working on the weekends, there's a handful of things that you always want to digest. Like, the first things first. Like, anytime you're working on the weekend, like, you need to go through the market indices first and just start to digest, like, really what's going on. Like, what's the big picture going? Like, how are things moving? How are they reacting? And then from there, like, you can build out, your thought process and your watch list over anything. So, like, the first thing I always want to do is, like, I want to figure out what the heck is going on in the overall market. Then I want to look at, this is like always a good Saturday routine. You want to look at the overall market and really take in and digest, like, what's going on. Then you want to look at the big winners of last week. Like, what were the stocks that were moving the most last week? And you want to figure out, like, number one, if you traded them, how you could have traded them better. And if you weren't trading them, you got to figure out, like, what the heck was going on in your thought process so that you can attack them for the next week. For retail traders, like people that are trading, like, I would say anybody that's a retail trader is like somebody that's trading like less than $10 million, right? So if you're a retail trader, like, your job is to be in the best stocks. Like, that's just your job, right? Your job is to be in the best stocks at all times because you have to have your money work efficiently. So you want to really study, like, what were the big movers, how they're moving, what were the characteristics of them, and then go on, so on and so forth. All right. Let's get into this. So let's talk about the QQQs. The main index that you always want to be watching, and really the only one that's even worth watching, is the QQQs. Why? All the biggest companies in the country now are tech stocks. Everything that people talk about, people trade, are tech stocks. So, like, the old adage is you should be looking at the S&P 500, and that's just not really the case anymore. Like, the S&P 500, like, if you're trading stocks from the S&P 500, like, they usually are dogs, right? So we want to be trading tech stocks. I mean, the tech market's up a double, basically, is from the March lows. That's one of the biggest runs I've ever seen. So we want to be always looking at the QQQs first. So there's a handful of things that you want to always do when you're looking at the NASDAQ. Number one, you want to always be thinking, okay, what is the direction of the overall trend? So obviously the overall trend is higher, and you can just see that, like, common sense wise from price, right? The other way that you can always just signify trends is with the application of moving averages. What I mean by the application of moving averages is that your 9 EMA is your shortest term moving average, your 20 is like your intermediate, and your 50 is also an intermediate, and your 200 is your long-term moving average. So the slope of your moving averages will tell you the power of that trend on a particular time frame. So when you get a particular moving average, like actually just pointing higher, then you know that the trend in that particular moving average is also higher. So what we can see right now is, right, the 9 EMA is pointing higher, 20, 50, which is all obvious. Now, we know the trend is higher. We also, if you look over here, the QQQs were up about 4% last week, which is still a pretty good week. No TOS. I use TC2000. This is probably the best charting platform for, like, in terms of like bang for the buck. At least I think so. Best charting platform in terms of bang for the buck. For like $45, you can have like pretty much everything everything you want. Yeah, and you guys can have this layout if you want. That's the layout. So there's a handful of things that we want to see. Number one, the trend is higher. Okay, that we already know. So we want to like lay out some scenarios for the next week, right? We want to lay out like a bullish, neutral, and bearish case scenario of what the market could do. That way that we have contingencies for like everything. So our bullish case scenario, what would be our bullish case scenario for, what would be our bullish case scenario for next week? Well, the bullish case scenario is just, right, we continue on the trend, over the 9 EMA, because that's your short-term moving average. So that would be like, your kind of bullish case scenario. 2, your neutral case scenario. What would be your neutral case scenario? Well, hot damn. The neutral case scenario would be like, okay, the market pulls back, somewhere into this zone, right? Somewhere into this zone, you're going to pull back. And if you really think about, like, you're at the top of the Bollinger Band, you're at really, really overbought at the moment. Like you can see here, like you're at 89 stochastics. So the stochastics indicator is not really anything for trading. But for the most part, like if you get into the 90s, I mean, you're at like you're at an extreme overbought level. So at that point, like you got to come back down. It doesn't mean the market's going to crash down or anything. But what it will do is like you have to consolidate via time, meaning the market will go sideways, or you will consolidate via price, which is the market will pull back. So what we need to see, like I think our neutral case scenario is that, we pull back or go sideways as long as we hang out over this 20 SMA, because you can see this 20 SMA. If you look at the overall market, the 20 SMA has been really the bounce spot for months. So this whole run since March, the 20 SMA has been the bounce spot in the market, right? So as long as we hold over that, we're still bullish. We're still bullish, even though we may pull back a little bit. It doesn't necessarily negate the trend, if that makes sense. So you got to always be just like super mindful of like what is going down, and like you've always got to be just like, okay, 20 SMA, that's my sweet spot. As long as I hold over that, even if it looks nasty for a couple days, that's okay. Like I still am in the trend. So I think once you break under the 20 and you actually hold, that would be like oh shit, like we're going to pull back a little bit, right? We've got to pull back a little bit. So I think our neutral case scenario is as long as we hold over 20 SMA, we're good to go. And then our bearish case scenario is like if we break under the 20 and hold, because we haven't actually done that in this whole run. If you think about this though, in my years of trading, so I've had this business since 2008. In my years of trading, like I've never seen the market go this long without it even testing, the 50 SMA. So does that mean it's like going to happen right away? No, not at all. Like we just follow price, right? Price is the only thing that matters like in trading. But in general, like, it's been a lot of months. It's been a lot of months. At some point, we can get a nice pullback into the 50 or, even a little bit bigger. That would be awesome to just like reset some charts. You're probably noticing on like a lot of plays that every chart is like so extended, right? Like everybody's like, hey, can I buy Apple, or can I buy Tesla, or can I buy Google, or right? And it's like, who the fuck wants to buy? Who wants to buy Tesla at like $2,000, right? Like it doesn't make, it doesn't matter, but like it just doesn't really make that much sense sometimes. So a little bit of pullback wouldn't be the worst thing. Let some charts reset, because frankly, we are really, really extended. Now, one thing that you always want to do, and this is like your index list, guys, and I'll send you guys, I'll send you the list of indexes to always go through, and I'll just send you the tickers here. You can add it to your own charting platform. The first thing you always want to do when you go through the indexes is you want to run a 5-day sort. What I mean by a 5-day sort is you want to go through, so like I track 30 indexes. You want to go through them and run a 5-day sort to just see like what are the indices that are up the most of the last 5 days, and like so you get an overall picture of what's happening. So one thing like you'll see here, and this has been the case for this whole year, is the solar industry, solar stocks have been running rampant. So the solar stock index was up 8% last week, which is incredible. For like an overall index to be up 8% that's pretty cool. So when you get this, we know right off the bat, like, okay, if the solar market is trending, if the solar market is trending, hey Kimberly, if the solar market is trending, and you've got like this monster cock run on this thing. Sorry, I don't know why I say stuff like that. When you're trending, what you want to be doing is thinking like, okay, this thing was up 8%. It's obviously a market leader. I need to find some solar stocks that could run with it. Does that make sense? So what we're doing is this is a top-down approach. So first we look at the indices and we see, okay, which ones are leading the way. Then we look for individual stocks within that indice. So TAN is the overall ETF for solar. So what you can do on any TC2000 is like if you hit this, and this happens at any trading platform. See this like 3-prong button? If you hit it, you'll start to see like what makes up like a particular ETF. Like you can see the components of it. So then what you want to do is like you just want to go individually and see like, all right, what could I be trading like next week? Now, when you're thinking about like adding something to your watch list for trading, you need to look at stocks in 2 ways. Number one is like, can I day trade this back and forth, right? Is it trending? Is it got range? If it is, then that's something you can day trade back and forth and using a handful of day trading techniques, right? ORBs, quick pullbacks, flag patterns, VWAP patterns, so on and so forth. The second part is like if the chart hasn't moved yet, but it's about to move, then you need to ask yourself, like, can I swing trade this? And what that means is like, can I actually buy this in a low risk spot and I can hold it for multiple days? Does that make sense? So you got day trade and swing trade. And you should always make lists for both. Like you're going to have to learn how to do both over time. Some people are very dogmatic, like I'm a day trader or I'm a swing trader. In this market, the market has been red hot for a long time. Frankly, in this market, buying and holding stocks for multiple days has been the play. Yes, it's been a great day trading market, and you're hearing stories all over the place, like, right? Like, some kid with braces and, some pimples, living in his mom's basement, like made $2 million buying XYZ stock. And now he's got a Discord room, right? You hear stories about that all day. I don't know if it's real or not. It don't really matter. Good for them. Hopefully he gets, some medicine and gets his braces off and gets a nice haircut. We want to ask ourselves, can I swing this? Can I day trade this? Now I want to go through this index. So what do you think of this run? So this is like your classic dilemma of day trading versus swing trading. So this is a nice trender. The stock had a $3 range. So like anytime, if you want to see like how much a stock moves on average per day, add an average true range to your chart. So that's on the bottom here. So what average true range is like what is like how much does a stock move in dollar terms for X amount of time. So I would change this to like about 10. So what that's going to say is like what's the average true range of a stock for the last 10 business days, for example. So when you see a stock like this, like you have a stock that's like, okay, this is trending. Now, can you buy this for a swing trade or like an investment right now? No, right? Because it's already been running. If you want to buy something and hold it for multiple days, then guess what? You got to catch it like at the inflection point of when it's going to explode. But like the fact that it's just kind of cruising up like this, and it's not necessarily parabolic or even that extended, you can still day trade it back and forth. So like this is probably something that you want to have on your list. Fslr. So this is another solar stock. So what do you think of this Fslr? So Fslr just kind of broke out of its pattern. So this is a consolidation pattern. Stocks in general, they get their power from basis. They get their power from consolidation. They get their power from sideways movement. That consolidation, the building of steam of when a stock rests. So when you get a trend and then you rest, then you get a trend and you rest. Those resting phases is what builds up power in a particular stock. And what happens is when you build up that power and then you break out over key levels, then that's when you can get something that's like a big home run. So you've got like this resting phase that's been happening in this Fslr. All right? And okay, so that looks good. Now, like, so what do you do with this? So what you always want to do is like think like, okay, what do I want to do with this? Okay, it looks good. Somebody says it looks good. What can I do? What can I do? Like, how am I going to play this? So the first thing you always want to look back. So like say you like a chart. You want to look back on the thing and always be aware of all the booby traps on a chart. When you look back on a chart, like go back like a year or so and see like, is there any level of resistance overhead? Is there any level of supply overhead? And if there is, like you have to plan around those and trade around those. That's where the booby traps are. So you want to always go back and say like, okay, like is there anything on top of it? So what I mean by on top of it is, if you have resistance overhead, somebody's going to rain shares at you. So you want to go back. So like, okay, there's nothing back here. If you go back here, so this level here is like at 81. So you're right at that level from 2018. Okay. So you're right at this sweet spot you even like broke a little bit above it. So that's good. You're clearing out levels from 2 years ago. That's important, right? So now there's nothing on top of it from 2018. So that's important. So now you go back. Is there anything back here? Let's just keep extending the line. The longer the breakout is, like meaning when you're clearing levels of supply and you're going back, the longer you go back, the more powerful it can be. So you go back, keep extending. And look at that, it only goes back to 2015. So we go to weekly chart. So it's a weekly chart. So meaning a weekly chart means that each one of these candles is 1 week's worth of price action. So you go back. Clearing. So you're clearing out levels from, so like for example, like I had hair like fucking Bradley Cooper back during these days. Like right, like he's got great hair, doesn't he? But that's a long time ago. That is a long time ago. So you are clearing out levels from nearly a decade ago. Think about that. So this, this whole range is like, frankly, really important. If you can clear out of this, like you want to do it like just a strict analysis of like, where can you go? Where can you go? What can you do? Right? These are just the telltale things of life. Where can you go? What can you do? So you're clearing out this 80 spot. Where is is there any level, so there's no level of resistance that goes back for years. It's like you don't have really any action on this stock to like this range. So if you can it's true. It's true. I would have been in Hollywood if I kept that hair. I wouldn't be just farting around my computer all day. So you got no level of congestion really up until here. So this level clears, like you're gonna have a shredder. You're gonna have a shredder. So like, okay, so how do we do this, right? Any close over this level here, this line over here that we've drawn, any close over here, what you want is this 9 EMA to tighten up on it. You want this 9 EMA to tighten up on it. Any close over this level, if you can get the 9 EMA kind of like resting under it, then you have yourself a way to limit your risk, and you're gonna have yourself like a pretty good swing trade. Like you'd hit it, maybe use like a $5 stop loss. You know, use like maybe a $3 to $5 stop loss, depending on like, you know, how tight you can get that 9 EMA. When you get that, then you're gonna have yourself potentially a runner. It should take it to maybe 100, 120 according to just according to simple supply and demand characteristics. So I like that. So when we take a stock that we want on our watch list, flag it. So you hit F on your TC1000, flag it. That's something we need to be watching. That's a heater, you know. Sure, it's not like, you know, the sexy name that, like, you know, sometimes you see stocks on the tweeter or whatever, the tweeter, the twatters, and people are like, you know, I mean, like 50% of the stock, and you're like, all right. This is not going to be like that. This is going to be like a nice solid trade where you're going to get a good shred, and you're going to have minimal risk. You know, you're going to have minimal risk, which is the most important part. CSIQ. So this thing, I fucking missed this, huh? So look, you're up 1, 2, 3, 4, 5, 6, 7 days in a row. So it's probably a little bit extended to buy. But if you look back on this, like you have a big time breakout that's happening here. This is also a breakout that's happening over, look at this thing. That's happening over like years. Now, if you see here the 9 EMA, this is $28, so it's getting extended. And what I mean by extended, how can you tell extended? So if you're thinking in layman's terms, like if something's too extended, there's 3 things that you can use, all right? So you're looking at this saying, okay, this is extended. So how do you know if something's extended? There's 3 things to always look at to know whether you can still buy something or not. So like this is a hot stock. Like you probably want to be a part of this, but entry is everything. Entry is paramount. Entry is the key to everything that you do. So how do you know if something's extended? There's 3 things. Number 1, you can use the stochastics indicator. Anything over 80 tells you that a stock is extended. So that's probably the easiest way to do it, okay? So obviously at 87, like you're a little bit long in the tooth. The second part is like anytime a stock breaks outside its upper Bollinger Band, so see this like kind of like invisible line, like gray line? I use that, so that's telling you like, okay, that's like essentially an envelope around a stock. It's a Bollinger Band's an envelope around a stock. And what that envelope says is like, okay, this is the natural range of a particular name. So when you get like a majority of the candle, like completely, you'll pierce the upper Bollinger Band all the time. But when you get like the majority of the candle, like completely outside of that band, what that's telling you is this thing is probably a little bit extended and it's going to pull back. Like see over here, like you got the candle completely out, so it pulled back for 2 days. Now, so you're starting to get into that. So you're going to probably pull back for a couple days. So this is probably a good stock to watch, but it's not necessarily something that you can trade next week. You know, there's a little bit of a caveat on that. So it's a good stock to watch, but it doesn't mean you can trade it. So how you know if a stock is extended? If it breaks the top of the Bollinger Band, that's extended. If you got overbought stochastics, anything over 80, that's extended. And then like the most common sense way, like see the 9 EMA, if you can fit 2 thumbs between where the 9 EMA is and the price is, if you get 2 thumbs and just like regular person thumbs, I know some of you guys got ham hocks for hands, but If you can fit 2 thumbs and you're over that, then it's going to be extended. So like this is an awesome stock, probably something to watch over the course of the next couple weeks. But if you can fit 2 thumbs, you're a little long in the tooth. So we got to leave that one alone. Now, what do you think of this? So this one actually hasn't gone yet. And you got about a 1-month consolidation. It's been consolidating since August. Stocks get their power from what? Consolidation. They get their power from basing. So you got 1-month consolidation. This thing's hot. If it breaks out of this level right here, this consolidation, like you're probably going to have something that could run for quite some time. If you look at this, it's been a huge trender the last couple of years. This stock used to be $1. What the fuck, right? Just once. Can I get in one of these at $1? Hold it. You got a nice base here. We know that the sector is hot. So this is what we call top-down approach again. We know that the sector is hot. And we know that we've got a nice consolidation up. Now, this thing is going to be a business to trade for a little bit. Why? When you get a stock that's stuck in a range and it's just resting, it'll move herky-jerky, meaning it's not going to have any rhyme or reason like when you're trading it, till it actually breaks and clears. Till it breaks and clears, it's going to just act like crap. That's always the case. So like if you're ever trying to like day trade something and a stock is stuck inside a range or some type of consolidation, it doesn't move well. Why? Because you're stuck inside a range. It's only when you're released above resistance that a stock will move clean, that it will move in a way that makes you proud. But till that happens, it'll frustrate you, it'll annoy you, you'll be pissed at it, you think this thing's the devil, because it's been acting like that. It's been acting lawless the last couple days. It's been acting lawless. Why? Because it hasn't broke yet. When it breaks and holds, then it's gonna be hot. So if this thing breaks out, I would go just put a stop at the bottom of the range. So about $3 and some change. Aaron, $3 and some change. Now a lot of people be like, man, I don't want to really, $3 seems like, a lot of risk. It's not. If you think about like what this last move was when it 30 to 76, right? Look, you always want to look at a stock. So this is what's called a measured move. If anybody knows what a measured move is. When you are looking at a trade, you want to look at a measured move. What has it moved in the past? That will give you guidance into what it can do when you're actually in it. So you want to always give yourself like, okay, what did it do its last move? So it went from 38 to 75. Then this move, it went from 22 to 70. And then this move, it went from 17 to 58. And then this move, right? So like you just want to give yourself an idea of when this stock goes, how much can it actually go? So we know like this stock can move. So that will help you justify your risk. So if this thing breaks out and you use a $3 to $4 stop loss, it's only a few percent. And you're probably, if it works, you're going to rip 10, 15, 20, 30, 40, so on and so forth. Man, Legend Forex is so boring. And if anybody's ever tried to trade Forex, there's only like a handful of tickers to watch, and they just grind along, right? Like a hot Forex move is like 0.2%. Like I want to trade stuff that makes my balls tingle. Right? Like in the stock market, you have 8,000 different names. You can run scans every day, even on a boring day in the market. So like the market could be up, it could be down. But on any given day, you're going to find 24 stocks that just go ham, that just like start just roaring. And that's where you want to, that's the game, right? And if you really think about it, like people that have made a shitload of money, like over their lifetimes or whatever, right? People that made some real money in investments or trading. They're trading stocks. Like, you don't hear of like anybody that's like, hey, I'm like a multi-million-dollar Forex trader, right? Like Warren Buffett, Phoebe Buffett's older brother, like he doesn't trade Forex, right? Like, so no, you've never even heard of a famous Forex trader. Nobody has. Forex is, I'll tell you the thing about the Forex, why it's like really popular. Forex is popular because there's all these groups out there that like multi-level marketing schemes or whatever. But in Forex, you only need like $50 to open an account. So what happens is you put like $50 in an account, some asshole tells you like, hey, yeah, you're going to get like a lot of leverage and you can like make money with it. That $50 will be gone. It's just a gift to the broker, right? And it's a gift to whoever like scammed you into it. You can open a Forex account with like $100, $200, and they'll give you all this leverage. If somebody lets you fucking trade for $200, guess what? They're trying. You're gifting them that $200. It's not possible. It's just not. It'd be nice, right? Because everybody's got to start somewhere. It'd be nice, but you just can't do it. Like if you're gonna try to trade with $200, $500, like mail me the fucking check. Like I'll hang on to it for you for a while, and I'll give it back to you in a year. In the meantime, like you hop on a simulator, you practice, you study, and you get better. Right? You work on your craft. And during that time, spend put every couple weeks like $50 here, $50 there, and just kind of build it up, right? Once you get to a handful of $1,000, now you can take your shots. But till that happens, no. So that's the problem with the Forex is the Forex market is made for one specific reason. To tell people that don't got any money that they can be in the trading business. That's not the case. That is not the case. And yes, there will be a handful of, there's a handful of people. So like a big time investor will make a handful of trades in currency at some point to hedge things and stuff like that. But it's not their go-to. It's not their tour de jour. Now this SPWR, bum, 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 bum. Nova, this is actually a stock like that's, this was $6, $30. See how this thing is going back, and consolidating here? If this thing rips over say $26 and holds, just to be safe, if this thing rips and holds over $26, this thing is probably going to start running again. It's not sexy. It looks like it's just kind of like a nice mover. But if you look at it, over the course of a month, this thing doubles up. You hold on to it for a good month or so, it'll double up. When it goes, it usually doubles. So it's not it doesn't move huge every day, but what it does is it moves huge over the course of a handful of weeks. So this one is actually pretty good. I actually do a lot of futures trading. I wouldn't do regular futures because it's going to give you heartburn, and frankly, the leverage is too crazy. But they have what's called a micro futures contract. Micro futures is a 1/10 of a futures contract. I do this thing, it's called the MNQ, all the time. And MNQ is really easy to trade. So that's the micro futures for the NASDAQ. And there's no pattern day trade rule in futures, which is awesome. And you can trade this MNQ for you can get one contract for $1,000 in margin. And it moves pretty good. You get $2.50 for every point it moves. For every point it moves, you get $2.50. It's very liquid. You can get in and out easily. There's no pattern day trade rule. And yeah, you're just essentially trading the NASDAQ index. And you can build up. If you're under, by the way, if any of you guys are under the pattern day trade rule, trading micro futures is a great way to build up your account. The issue is don't do the regular futures, do the micro, because it's only $2.50 risk per point. So what you want to do is essentially find spots in the index where you can risk like $25 to $50 max per trade. $25 to $50 max per trade, and find yourself in spots where you can rip like 100 points on the index, 200 points, so on and so forth. Find those inflection points. What'll happen is, if you get stopped out, you lose $25, $50. If the trade works, right, maybe you'll make a couple hundred to 500, and dude, like, you will shred. Like, if you look here, like this particular day, if you're trading like these kind of breakouts and stuff, like this move from here, like, you see this breakout over here, the market just opened and it broke out here. This move from like 1180 to say like, this is almost 12,000. That's like 200 points. If you have two contracts, that's going to trade you. No, Ruckus, I'm just here just picking my balls like on a normal Saturday. And you got two contracts that cost you 2 G's, right? And if it moves 200 points, you make 200 points, $250 a point, $500 for each contract. You make $1,000. You make $1,000 on the move. Oh, yeah. So you make $1,000 on the move, right? And your risk on the trade might have been... So if it breaks out at 11 and your stop loss goes at the 9 EMA, it's at 1780. So on 2 contracts, that's 20 points. 1 contract, your risk is 20 times 2, 50. It's like $50 on 1 contract. Your risk, right? That's fine. Like, that's, acceptable risk. And then, like, these kind of moves, like, see, like, the first pullback to the 20 EMA always tends to work. Like, these kind of moves, like, you can scalp around and do stuff like that. Futures trading is tough. If you are just, like, commando everything and just, like, right, try to gunsling it. But if you're doing micro futures because you're newer, it's less risk, less margin, and you just build it up, $100, $200 at time. And that's, I think, the most important thing. If you can rip a couple $100 a day, you're good to go. All right, so let's go back into these indexes, all right? So banks. If you look over here, like this bank index looks like it's going to break out. Like, you've got a nice consolidation here. Like, this one looks like, this one looks, I still use Brave Botter, but I'm not using Brave tokens anymore. They suck. This bank index looks like it's going to break out. Now, the big thing is, okay, so the bank index was up 4% last week. It's not bad. 4%, like shit. There's a couple of buts about this. Number one, bank stocks stink to trade. Right? If anybody's ever tried to trade a bank stock, it is the worst to trade. So bank stocks, they stink to trade. I think they were hot in like the 1920s, and then they haven't been hot ever since. But you got like a third test of this. See this 200 SMA? You got the third test of this. So if you break over the 200 SMA, you're going to have like a nice run in banks. And it's going to be something slow because bank stocks don't move that well. But like you can see here, like the last 5 days, it moved 4%. So if it gets over there, what you can do is there's a 3X ETF called FAS. There's a 3X ETF called FAS. If you can see here, if that banking index goes, this one will move better. This is a 3X ETF, meaning when XLF, the underlying ETF, moves, say it breaks over. So what you want to do is put an alert here. So like just right click this area, create a price alert, right? Right click the area, create a price alert. So when you break over that area, your computer's gonna start, giving you bong, dongs, like all sorts of stuff starts to pop up. If you break over the 200 SMA, like this thing's gonna go. So what you want to do is like this, the ETF itself moves too slow. So you want to move to FAS. This is the 3X ETF for banks. If it goes, you can see here, you got like this nice consolidation pattern that's going to go up. So when the XLF goes, see how tight this range is? What do we talk about? Stocks get their power from consolidation. They get their power from basic. That congestion of range, the compression of range, is what allows a stock to build up steam. It allows the stock to build up steam, right? So what's happening here is, if this thing goes, like you're not going to have any resistance to like 54. So you're going to risk on the trade like maybe $2, all right? The 90 EMA is at 38. It's a 40.94. If it breaks, like you can probably risk $2, 2 points on the thing. And if it can go, you'll get 15 points, 16 points. So that's a good reward to risk. On any given trade, you always want to ask yourself, is the juice worth the squeeze? Is the juice worth the squeeze? Is the juice worth the squeeze? Because if it is, and what that means is like if you can risk $1 and make a few, then the juice is worth your squeeze. But if you got to risk $1 to make $1, then you might as well play heads and tails with your next door neighbor, right? Like, hey, heads you get $1, tails I get $1. That's all it is, and that's where most traders go to. They play heads and tails with their stock. If I win, I make $1. If I lose, I make $1. So then you never get anywhere. You want to think about like, okay, can I risk 2 to make 5? Can I risk 2 to make 10? If you can put yourself in asymmetric reward to risk scenarios, then you will make money. And you'll make a lot of money. Because even if you're wrong all the time, say you're wrong on the trade, you lose $1 or $2. And then you wrong on a trade again, you lose $1 or $2 again. But then you hit it the third time, you make 10 to 15. Are you still in the profit? Yeah. So what happens is if you can always look at a stock and say, is the juice worth the squeeze? And make sure you put yourself in asymmetric reward to risk scenarios, then you will never lose. Because even if your win ratio stinks, you'll still be making money. So as bank stocks think to trade, but you can do the 3x ETF and it'll move pretty well. Because if this moves 4%, then the FAS will move 12% for the week. That's pretty good. Brazil. So Brazil's up 4% last week. No good. This is just stuck in a range. Transports. So if you guys have actually, transports are like the worst stocks usually, but they've been moving. So what do you see here? You got a big 1 year breakout, right? Big 1 year breakout. So so you got a 1 year breakout setting up. So what you want to do is, okay, you see a sector that could break out. So this looks like it could break out, right? So then you want to find the individual sectors in there. So what you want to do is hit this 3-prong button, all right? Hit it. And now you can see like what makes up that ETF, right? So you can see like, okay, like FedEx, United Paper, United Pacific, so on and so forth. So you got some shipper companies, some airline companies, right? And you want to start to find like what could move. So if you look at this, like, okay, if the transports are going to cook, like this looks like it could go, right? That could go. There's a handful of these that look ready to go. Consolidation. See these like consolidations? If you start to break out of there, then that's when the run happens. Woo! Look at this thing. So 1 test of resistance, 2 tests of resistance, 3 tests, 4 tests. You got 9 EMA. Curls for the girls coming up under the kitchen on that thing. That thing is hot. Now, UPS is not going to be like the fastest stock, right? It's UPS. But if you see, like, man, this thing just cooked. This thing's been cooking. Like, it's a boring stock, but it's safe. And you still, like, it moves pretty good, don't it? So you got, if this thing breaks here, you want to put your stop under the 9 EMA, give it an extra 50 cents. So if it breaks this level, you put a stop under the 9 EMA and give it 50 cents. And now you cooking and booking. It doesn't look like it's the fastest stock around, but if you look like the last couple times it's moved, like it moved like 20 points. 100 shares, if think about it like this, 100 shares, you're going to have a $2.50 stop loss. You're going to risk $250 on the trade, and you might make 20. So you could make between 1,000 to 2,000, you're going to risk 250. If this thing breaks here. That's pretty good. Aaron, you might be just buying the wrong ones. You gotta be in the hottest ones. I tend to anticipate them, and try to get them before they go. Yeah, so on and so forth. All right, so let's look at the SPY. So the SPY here, this is the S&P 500. Aaron, you got any examples? Let me look at those. So the SPY here, like you're breaking over all-time highs here. This is pretty, the market's breaking out. There's nothing else to say. No matter what you think, right? Like, okay, like everybody's got opinions on the market. Like, the Federal Reserve is doing this, and the election is going to happen, and, like if Democrats take over, this will happen. If Republicans take over, this will happen, so on and so forth. None of that stuff really matters. Like, in general, price is the only thing that pays in the market. The market is breaking out. Now, why it's breaking out, does it really matter? No. You put $1 in my pocket, how it got there, I don't give a shit, right? Like, you put $1 in my pocket, I'm going to take it. How it got there, whatever. Whether you put it in my pocket or I picked it up off the floor, it's still the same for me. The market's breaking out. Like, no matter what you think, like, do not get caught up in opinions, trying to overread the market, trying to look at the fundamentals of stocks. You may look and say, like, oh my gosh, like this company makes no money. Historically, the best stocks always don't make money. Like, none of them make money. You ever see, like, NVAX? NVAX been around like 30 years, never made $1, right? ENPH. This thing does less sales than my fucking company. But it's $9 million company. It don't make any money. It don't really have anything going. It don't really matter. So the market is cooking, the market is booking, and we just got to trade price. We got to trade around that because that's just where the action is. Silver. What do you see this thing here? Gut feeling here based on this pattern. Silver's about to bust loose. Silver's about to bust loose. Oh, man. Now, if you look at it, like, silver itself is not very sexy, right? Because it's like, okay, it just moves around, a few dollars at a time. These days, like, everybody wants to play penny stocks, right? Like, right? So silver is not very sexy. But if this thing breaks here, like, it's got a chance to go. So, okay, how can I get some additional oomph on a silver trade? So I like silver. Let's just say you like a commodity, you like an index, like silver. So how do you get some oomph on it? How do you get a little cock stamina on the thing? Well, you can always go to a 3x ETF. So the 3x ETF for silver is AGQ. All right. So you got this AGQ. So silver goes as AGQ follows. So add this breakout, like you're just right at this spot here. I think the trigger is probably about 62. The trigger is 62 on this thing. All right? The trigger is 62 on this thing. If it goes over 62, I think this thing's a buy. That'll give you a little additional oomph. You can see this thing like, it's just at $28, went to 70. That's going to give you the oomph that you need. All right? So the trigger on this is about, the trend line break and this last high is about 62. If it breaks over 62, maybe do about $5 stop loss, a little bit less than $5. Take it back, give it about $1 under this 9 EMA once it breaks. You'll get this thing back up into the 70s real quick. All right? That one's hot. What's another thing that you can do? Like, say you like an underlying commodity or something like that. What can you do? Well, you can look inside, right, the actual silver ETF and see if there's like any stocks that make it apart. Or you can do a futures contract. So I will use the E-mini. E-mini, a futures contract for silver is SIL. Right, it's the same pattern. So this thing starts to bust loose. Like you can see here, like this kind of 28 zone has been resistance for a little bit. If this thing busts loose, you see this thing at 30 bucks real quick. So it doesn't look sexy, but this is how silver future contracts. This is 1,000 ounces. You buy one contract of this on like your Thinkorswim. I use Thinkorswim for futures trading. Terrible platform, but what are you gonna do? Thinkorswim stinks, right? Anybody use it? It's the worst. So this is why silver future contracts fun. Number one, there's no PDT, no pattern day trade rule. The second part is like one contract of this is going to cost like say like 2,500 bucks, give or take. For every penny it moves, you're going to get $10. Think about that. For every penny it moves, you get 10 bucks. So what happens is like I day trade this thing back and forth all the time. So like you get these days like it starts to trend. See like this day, like it's going, see how like all these dips are getting bought? You get $10 for every penny it moves. Think about that. So it moves 50 cents, you get 500 bucks. No pattern day trade rule. It's only going to cost you a little bit less than 3 G's of margin for one contract. That's how you can kind of, if you're under the PDT, a mix of doing like a handful of day trades a week, like growing a small account is like, it's so overwhelming sometimes. Like, I remember I had to do it like so many times in my career, right? Like growing a small account is so overwhelming sometimes. But like what you want to do, if you really want to grow like a small account, there's a handful of things. Like say you want to grow a $5,000 account. This is what I would personally do. Not saying you have to do it. You can make 3-day trades a week, right? I'd use the leverage. I'd wait for 3 perfect day trades. There's going to be those handful of stocks like every week that like really go bajonkers. So you make 3-day trades in a week on stocks. When you run out of day trades, you trade the micro futures. NASDAQ, gold, silver, that's pretty much it. That's all you need to do. If you don't see any good micro future trades, then you do swings, right? You buy a couple stocks for swings, split your account, 2,500, whatever. You're good to go. You take that thing, you'll have that thing from 5,000 to over PDT in, 3, 4, 5, 6 months, whatever. It'll take some time, right? There's no shortcut to it. It'll take a little bit of time, but you'll be able to do it. Micro futures, the 3 best day trades, and then have like one swing going, you'll get over that PDT hump like really, you'll get over it pretty much quicker than you think. The trading weeks go by fast. Like if you think like, oh my God, I gotta wait 6 months before I'm gonna be able to build my account over PDT, it seems like a lot, but is it? No, not really, not in the scheme of things. You could be trading, for 30, 40 years. So take 6 months to do it in a low risk way, it's not a huge deal. The AGQ, flag that. Hit F, flag that. I think that's top of the list for next week. SMA, shaking my head. This is the semiconductor ETF. Marvin, that's pretty good too. Yeah, that's a good idea. So you got a big trender in semiconductors. So if you think, okay, semiconductors are hot, like you like that, what would you do? Always get a margin account, Jamil. You use the juice. Use the margin account because then you can short. Cash account's fine, but you can't short. So go through a semiconductor stock. What stocks are looking like they could bust or lose? And junk. EMD, not bad. Right? Always top-down approach. AMD looks like it could bust loose. This Marvel, too extended. MCHP. You know what? I think this is an IBD stock too. The IBD stocks have been cooking in this market. IBD stocks are like Investor Business Daily, stocks that have like really good earnings growth. They've been like the hottest stocks in the market. You see this thing right here? That's hot. So you got One test, two tests, three tests, four tests of resistance. This will be the fifth test of resistance. If it breaks, this is probably going to be a multi-day, multi-month type of hold. It could run for months. The longer the base is, the more times you test the level of resistance, the hotter it gets, right? The hotter it gets. So now you got, okay, if it breaks basically 111, 112 zone, put a stop at about 107. I mean, you're going to have like a multi-month breakout probably on this stock. The longer the pattern, the longer the base. Like if you look, think about like these stocks. See like this BABA, same type of deal. So like you had a trend line here that went for 2 months, right? So if the trend line went for 2 months and it breaks, how long can you probably hold it? If you got a 2-month pattern, you're probably going to get a 2-month run after that, right? The longer the pattern, the longer the run. Does that make sense? It's like that MCHP, like it's not sexy, but it's still pretty good. Does that make sense? Cool. Good. Junk. China. So China looks like it could break out. Watch this thing. So see this level here? China. This thing is a big base for like multiple years. So this is going back from 2018. All right. If this thing, it's not there yet, right? It's got a little bit of room. There's a 3x. So if China breaks, what you want to do is go to Chinese stocks. So there's a lot of good Chinese stocks that trade on the U.S. market. You have stocks like BABA, right? You have stocks like YY, Momo, so on and so forth. So like I got a list of Chinese stocks here. Hold on. China. Okay, guys. I've talked to President Lee. He's a fantastic guy. We are great friends. We've made love. Okay, but I'm not gonna let China get away with what they're doing. Okay, they're very, very bad people, and we're not gonna stand for it. So I got a list of Chinese stocks here. Anytime they start to, I'm sorry, I don't know what's wrong with me. All right, so let's go it. Oh man, there's a whole load. So if you go, China breaks. What are some Chinese stocks? They're fantastic. They're great people. I'm really going to miss the Trumpster just for the comedy. I'm not very political, but the comedy, like you just can't beat the comedy. All right, so some Chinese stocks. I got a list of Chinese stocks here. You guys can have this list if you want. There's some good Chinese names out there. Good Chinese names. This thing breaks 46. All China stocks are just gonna be, they're gonna be on fire. So you got like stocks like this, GSX. Like this one looks like it's very bouncy. Baidu. There's another one that looks like it could break out. Thanks, JJ. Huya has another one that looks like, you got a big range on this thing. Oh, shit. That thing looks hot. Like, if this thing breaks over 30, I wouldn't be surprised to see this thing go to 40 and then 50. 40 to 50, like, pretty quickly. This thing's got a chance. That's a big-time breakout if you look at it. When we start trading, like most traders, they zoom in too much. Meaning they're looking at, like, every penny. Anybody ever do that? Like, every penny a stock goes up or down, you're, like, so reactive to it. But what's happening is then you're missing out on the big moves. You're missing out on that like monster move. If this thing breaks over this level, like it's gonna take it to 40 real quick. So the question is, are you gonna sit there if it does this? Are you gonna sit there and fart around for the 20 cents here and there, right? Like, anybody ever do that? You buy a stock, it goes down like 20 cents, and you're like, oh shit, and then you sell it and it goes back up. I do that all the time. It stinks, right? Like, nothing makes you feel like a bigger chode than, right? You sell your stock and it goes right back to the roof. So what you got to do is just use a proper stop loss, right? Put one in, and then, hey Anis, how you doing, man? I got a lot of students in Dubai, oddly enough, and Abu Dhabi. Most of them use interactive brokers, I've noticed. So keep an eye. What I would personally do, because it's up on a short-term basis, it's up too many days in a row, I'd put an alert here. I put an alert here. So if it breaks over, you get an alert. And then you know to look at it. Does that make sense? Cool. Fix nothing. Oh. Oil markets, man. Oil is so tired. Look at this thing. You haven't seen a move in oil more than a couple dollars in months. Pass. Junks. Check this out. This is the small cap. ETF, IWM. Look how clean this is. So you got to pull back to 20. You got a nice flag pattern setting up over here. So if this thing breaks, like, you're going to get a run in small caps. If that thing breaks, you're going to get a run in small caps. So the 3X ETF for IWM is, as always, man, that's nice. Okay, so this is like more of an IRA type of trade. IRA, 401k type of trade. If this thing breaks this trend line, it's already there. Like, I'd probably just take the trade now. And put a stop under this base here. Like that. Personally, that's probably what I would do. Put $2 stop loss. If it goes, like, you got to run to maybe like 41 on this bad boy. You know what I mean? Oh, man. That's nice. That's something you put in your IRA. You get nice, 20% pop on the 3X ETF probably. Risk maybe a couple dollars. And you're good to go. China. Okay. We're going to build the most fantastic wall ever, okay? We're not going to let anybody in. You don't know. If you notice, the Chinese people, they don't have a problem with Mexicans. You know why? They got a fantastic bigly wall. So we're going to do the same thing, okay? China doesn't have a problem with Mexicans because they got a wall. We're going to get a wall too. It's going to be fantastic. They're going to be great people. You can hold an ETF for a week or two. I wouldn't, Look, some ETFs, Jason, check out this FNGO. This is the 3X ETF for FANG stocks. I mean, this thing's up 10X, right? Sometimes they'll work. Cool. So that's how you want to go through the market indices to see, like, okay, what are some stocks, what are some sectors that are going. The next thing, like, you always want to really be doing on the weekends, I think this is really, really important. You want to run, multiple scans. So what I mean by multiple scans, you want to scan for momentum. So, like, see this layout here? I've got on the left, daily chart. This is daily chart. On the right is an intraday chart. So what I want to be doing is going through a handful of things, all right? Handful of things. I want to go through all the movers of Friday to see, like, what could be a mover on Monday. So I want to be looking and seeing, like, okay, these are movers, and, like, maybe I'll get second day plays on Monday. And then the second part is I want to do, like, a very thorough examination of what were movers of the last week so that I can so that I can figure out like where the continuation is going to be. Stocks that have made big trends, they tend to continue on with that trend. If you're a swing trader, for example, so I'm a day trader and a swing trader, but mostly day trading. If you're a swing trader or day trader, like your trades should be very, very concentrated into probably like the top 100 stocks that are trending over the last 90 days. Like you should be hammering at those. So what you really want to be doing is thinking, okay, what are the stocks that are up the most the last 90 days? And then go through the top 100. And then from there, you got to go, yeah, I need some. We got a day trading and swing trading room. So I have a scan here. This is a 90-day, 30-day, 5-day momentum scan. You guys can have this over here. Hold on. So on TC2000, you can just set this condition. You can just use these conditions and you'll be fine. So what I want to do, so see this? Like I've got these columns here. So I've got columns here. So what I have is like I'm sorting. This is how you want to run a scan. A scan is just a sort, all right? So I'm taking a list, and then you want to run a sort function on it. So I'm taking a list. I'm taking a list of U.S. common stocks, so all the stocks that are trading in the United States, all right? And then I've got column set here. So I got a 90-day column set, 30-day, 5-day, year-to-date, 6-month, all right? So what I'm essentially doing is applying a sort function to a list of stocks. So right now, like say I click this is a 30-day sort function. What are the stocks that are up the most the last 30 days? All right? I've got a 5-day sort function. So this will give me what are the stocks that were up the most the last 5 days. And this is a good thing to run through. Why? You want to know when you're doing your homework, what was up the most the last 5 days? Why? Number one, you need to figure out if you weren't in those stocks, why not? Why not? Our job is to be in the best moving stocks. Our job is to be in the biggest trender of stocks. We are only as good as the stocks that we trade. We're only as good as the stocks we trade. Remember, know what book that comes from? There's a gentleman, Mike Bellafiore, who runs SMB Capital. He's got a fantastic book that's called the Playbook. And it's the one thing he always says. We're only as good as the stocks that we trade. Meaning that our job, if we are trend traders, is to be in the hottest stocks. So you want to run a 5-day sort. So go in here, click this bad boy, right? Run a 5-day sort. And you want to see, okay, what are the stocks that were up the most the last 5 days? What was I in them? Did they have room for more continuation? Did they have room for more continuation? So this Big C, if you look at a stock like this, I made probably 30-day trades in this thing the last couple days. You have to, right? When you get a stock that's up from $60 to $160, it moves $100. You got to be shredding this thing. So you want to go through. This is going to give you an idea of what stocks. See this NTNX? This is probably a stock that you really, really want to be watching. Why? It did 68 million shares in volume on Friday. That's monstrous. See how it just dwarfs all these other ones? You cleared out a huge base. So if you think about the stocks, what is the formula? Does anybody know the formula for big momentum? What's the formula for big momentum? T-bone, T-B-O-N-E. T-bone. So you want stocks that have 10% short float. Minimum 10% shorts in it. You want a stock with a big base. That's the B. You want stocks 100 million, give or take, or less float. Right, so I said 177, close enough. You want a stock that's been neglected. What I mean by neglected is like stocks that start multi-month runs, they're neglected. They've been like stocks that have been like trending down for a period of time, and then they're just going sideways. Like everybody's sick of them. Nobody's watching them. And they've been neglected. They go sideways for a period of time. And then one piece of news sparks it. And then it breaks out of a base. So it's been neglected. And then last one, T-B-O-N-E, T-bone. The last one is earnings. Stocks, so like if you see here, update. New to next fiscal results, beat estimates. That's good, right? Anything beat is good? Yes. So T-B-O-N-E, T-bone. %, short float, a big ass base, 100 million shares or less float, something that's neglected, and something that has earnings. Earnings is the catalyst. Earnings is the steam that makes stocks go. Even though we're technical traders, we're technical analysts. We're technical analysts. Even though we're technical analysts, we still want to apply charts. We still want to apply what we're doing to. We still want to apply what we're doing to something that's got news, something that's got a catalyst. All right? When you have a catalyst, then your technical analysis will work better. You can only make so much squiggly diggly money drawing lines on a chart. You can draw all the squiggly lines you want on a chart, but you can only make so much money. But what happens is if you can combine the fundamental, which is earnings, news, with the technical, and you marry these together, you've got the perfect storm. It'd be like if Celine Dion and Donald Trump had a baby, right? It would be magnificent. Strange and magnificent and erotic and esoteric all at once. That's where you want to go with this. T-B-O-N-E. Does that make sense? So keep going through these 5-day gainers. See this CRM? This is another one probably in the next few days we'll probably be ready again. Ooh, play. Look at this thing. See this? Big ass base. So what's the float on this? The purple line, or this, I guess this pink, is the float. 29 million share float. You got a big base, right? Multi-month base. Whoa! You gotta be in the game on this one. 14 million. The volume is popping. It's pop-a-locking. See, like how, like, so the average volume. So I always put a 14-day moving average on my volume. So that's this white line. So when you start to peak over that, it's telling you that the volume is expanding, that the volume is rising. And when the volume is expanding, the volume is rising, that's high on a relative basis. Absolute volume means nothing. It doesn't matter if a stock does 1 billion, 2 billion, 10 million, 5 million. What matters is the relative. If it starts to expand in a relative manner, woo! You can start to go. So the average volume on this is about 5 million shares a day. You did 15 million, give or take 14.8. Well, hot damn. Like, this is something we need to be putting on our list, right? We got a big base. So let's take a look at this bad boy. Let's see what the shorts are. So you can go to website shortsqueeze.com. So you got about 15 million shares and 15 million shares short. Say short interest short, 15 million shares. Now, there's only 30 million shares total that are even running around. So there's a lot of shorts, right? If there's only 30 million total shares out there, give or take, and you know the number is never exact on TC1000, and half the people are short, what does that say? Short means, right, you're betting against. Short means you're betting against. So what is it saying? What's it saying? Oh, yeah. Oh, yeah. It's telling you that, hey, we've got ourselves a little pizza party. A little pizza party. So we've got shorts. So think about what T-bone means. T-bone. 10% shorts. Right? That's the T. What's the B? Big ass base. Right? That big booty bottom. Juicy. Juicy. Bubblicious. That's the B. What's the 0? T-bone. O. Under 100 million share float. We got 30 million shares, right? So you got the O. What's the N? Neglected. This thing's been neglected, right? This thing was at $75. It's been just going down, 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 down. Downtown Julie Brown. That's an old 90s term. You got neglected. Oh, man. Now we just need a little catalyst. It looks like it's coming. Woo-hoo-hoo-hoo. This thing is hot to trot. Now, the only problem with Dave & Buster's, as you guys know, anybody ever taken their kids to Dave & Buster's? What a fucking racket that is, right? You go there. Anybody remember go to Chuck E. Cheese? You go to fucking Chuck E. Cheese back in the day. Your mom gives you $5. You play games all day. Now, you go to Dave & Buster's, you know, it's like one game is like $2, $3. Like, what kind of racket is that? Give me the Chuck E. Cheese tokens. Right? Like, man, that's such a racket. You want to do like some of those VR things at Dave & Buster's, man, they're like $5. I want those Chuck E. Cheese tokens back, man. 25, a game should be 25 cents. Whew. Dave & Buster's, I can't even go back in Dave & Buster's. It's such a racket. You know what? It was moving pretty clean. I would keep this on your watch list for the next week. Oh, yeah. HIB. So, right, these are just 5-day momentum scan. Look at this thing. Woo! HIB is nice. Shill. You guys should be running this scan every single day. At least on the week, you know, do it on the weekends. I like to go through stocks every day because I'm trying to go through 1,000 charts every day just for the training of it. If you want to be really, really good at trading, like you want to be really, really good at pattern recognition, go through 1,000 charts every single day. 1,000. It won't take long, maybe 30 minutes to an hour. You go through 1,000 charts a day of momentum trading, going through momentum lists. It will train your brain to see momentum in all its different ways. How does it look? How does it feel? What type of stocks show this? What's the price range of the stocks that usually do this? What are the sectors that are doing this? You will train your brain to see trends, see momentum in ways that you can only get from pure experience. You can't watch YouTube videos and learn how to trade. You just can't. You can't watch some of these online DVDs and learn how to trade. It's a scam. The only way you can learn how to trade is live mentorship, like people you can call, right? People you can talk to, people that'll yell at you. But the main thing is you got to go through 1,000 charts a day. Because if you go through 1,000 charts every single day of the year, how many days are there in a year? 350 days? There's 350,000 charts. Is there any chance you would suck at trading if you went through 350,000 charts in a year? You'd start to see things, right? You start to understand how momentum works, like how it moves, how it shakes, how it feels, what type of stocks it does it to. And when that happens, you start to build up that muscle memory, that database in your head of like what you really need to see, like where the moving averages are when you get a hot breakout. And what's the range expansion when the breakout comes? Like, how does the volume look when it shifts? And you start to train your brain. But all it takes is 1,000 charts in a day. 1,000 charts a day. You do it for a year. You go through this exact list that I'm showing you. Do it this exact same way. 1,000 charts. You will be good. You talk to me in 1 year, you do 1,000 charts without a doubt every single day, you're going to be pretty damn good. Right? See this shill? I think this thing's probably got some extra room on it too. This thing looks hot. So you got the old breakout. You've tested it. You're starting to flag out here. 9 EMA curls for the girls. Probably something for next week. That's probably a good day trading stock. I wouldn't, necessarily invest in this one yet because it's just doubled in a few days. But that's a good day trading stock. 1,000 charts. Come at me when you do it. If I could turn back time, if I could find a way, I get back, you say. If I could reach for the stars. Man, Cher is like an American hero, is she not? Yay! He is an American hero. Cher, Zach Morris, and Maverick, and Indiana Jones, and Tom Brady. These are the ultimate American heroes. Woo! See, this thing it's got a lot of heat. Woo! Cheesecake Factory? Man, what a racket Cheesecake Factory is too, right? Anybody ever eat at the Cheesecake Factory? Shit. Like, you would think it'd be cheap, right? It's just like, it seems like a simple enough name. Look at this thing. And it's breaking over the 200 SMA. Yo, that thing is hot. I gotta reach for the stars. I got it on to you. Malthus did. Look at that. 34% shorts? Hot damn. 34%? That's a lot, right? How many what's the float on this? 45 million. So it's very low float. It's a very low float. You got a big amount of shorts. You got a nice name, Cake, right? It just rolls off the tongue, Cake. Cher's behind it. Zach Morris is behind it. Tom Brady's behind it. This thing is a winner. It's an American hero. That thing's got good range. Now, restaurant stocks suck to day trade. This is more of a swing trading look. This is a swing trading look. I repeat, restaurant stocks stink to day trade. Robbie, I'm always in a good mood, mate. Plus, I was out all night. Jason Priestley was too short, man. Too short. Omar, you would like Jason Priestley. I was a Dylan McKay fan. Dylan McKay's he's a bad man. This thing is hot, right? Good. Big amount of shorts. Good name. Flag that for the next week. Cracker Barrel. Woo! I mean, Cracker Barrel's too much of a racket. I can't do it. Yo, see this? Roku up 17% last week. What do you see here? Check this out. What do you see? That's nice. Real nice. All right. So what does anybody know? What's the parameters of breakouts? What do you need to see in a breakout? Think about it like this. What are the rules of breakouts? Does anybody know? What are the rules of breakout? Need multiple tests of resistance. Right? Multiple tests of resistance. Minimum is what? 3. Minimum 3 tests of resistance. This is the rule of all breakouts. Doesn't matter the pattern. Rule of all breakouts. Minimum 3 tests of resistance. So 1 test, 2 tests, 3 tests, right? 4 tests actually. That's nice. The more times you test a level of resistance, the more powerful a breakout can be. I repeat, the more times you test a level of resistance, the more powerful a breakout will be. But in any breakout, you need minimum 3 tests. 3 tests are for winners, 2 tests are for losers. All right, so you need minimum 3 tests of resistance. So it's tap, right? Tap, 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 tap. You want to see multiple tests. You want to see moving averages curl up under resistance point to limit risk and also to provide power. You want volume expansion. What I mean by volume expansion is, okay, so the volume is on average at 8 million shares a day. It did 17 million shares on Wednesday, then had a rest day, and they did 26 on Friday. Is that expansion? Oh, I'm cheering for the Bucks, baby. I mean, obviously the Detroit Lions, where I'm from, they're not going to win anything, so... The Detroit Lions are not going to win anything. So I'm a Bucks fan. Obviously, if anybody's ever been to Tampa, it's a very, very strange town. Very strange town. Tampa's like the only one of the best towns around. Like, you have a whole hodgepodge of weird stuff that happens in Tampa. You get like all these like beautiful women's like blondes, but then they all got tattoos and smoke cigarettes, and they got fake boobs. I've never seen anything like it. Tampa is a very, very strange place, but it's fun. It's erotic. It's esoteric. I like it. And Tom Brady is there. So you got multiple taps of resistance. You got volume expansion here. Hell yeah, right? Good. So you got volume expansion. That's the rules of a breakout. That's all you need. If you ever want to get into like a really good breakout, you don't have to make it too complicated with too many rules. Always think like 3 tests of resistance, volume expansion, multiple taps, and you're good to go. You don't got to go in too much. You know it, Josh. You know it. This thing is hot. Like, I would not be surprised. So earnings are 11.4. Mark my words. If the market holds up, you see this thing at $200 really quickly. This is a big time breakout. You got all the tenets of what you need. I don't even know what the shorts are on this thing. 7 million shares short. That's pretty good. Good. Woo! Say about 10%, give or take. Test. Mark, that's a hot one. We got a hitter. CCL. So look, this is like a nice neglected stock, but like CCL's too much of a racket. Anybody ever been on a Carnival cruise line? I think they cater towards Indian people. Like there's something going on at Carnival Cruise Line. I mean, it's a rat's fest down there. It's a rat's fest. They get you because like it's packed with Indians, my people, because they advertise for like $200, but you go in there, all they got is like 18 pizza buffets. Woo! They got a nice racket going on Carnival, man. They pack them in deep on that thing too. So we can't even fuck around with that. The name even stinks. Now, like Royal Caribbean, that seems like a nice regal name, right? It's like, oh, like you wouldn't tell anybody you went on a Carnival cruise line. They'd be like, what, with the Indian people? But if you were like Royal Caribbean, that sounds like very fancy, right? Like I was just on the Royal Caribbean. It just sounds right. So fuck Carnival Cruise Line, we can't play that. But this Royal Caribbean looks nice. So there's only a hand. See these bottoming stocks? these bottoming stocks are like starting to come into flavor. So, definitely keep an eye on a couple of these. Woo! Another one I like, but the earnings are out coming on. I love this RKT. They got a nice racket too going. I'm all about companies that got a nice racket, meaning they got some kind of scheme going. So like rocket companies, I thought, like, I originally played this on the IPOs. I thought like they made rocket ships. And I shredded. I like crushed this thing for like 2 days. And somebody's like, yeah, they don't do rocket ships. They do mortgages. And I'm like, oh shit. But that actually got me even a little bit more interested. So they pre-announced their earnings like a couple weeks ago. And these guys are flying. So rocket companies or Quicken Loans, rocket mortgages, because interest rates are so low, they're cleaning up. But the other thing that happens is, the old days, like when you could put like $0 down on a house and like not check anything. Like they're doing stuff like that. Like they got, like, you can put like 3% down and get a home at Rocket Mortgages. That's a nice fucking racket right there, right? That's like the old days where it's like, you could be like a consultant, which means like you don't have a job, right? And you go in and you apply for a mortgage. You're like, yeah, you want to buy $1 million house? What do you make? And you're like, I make a lot of money. Like how much? Like a lot. And next thing you know, you got yourself a mortgage. This thing is cook it and book it. You're going to have to trade around the 9-2 earnings date. Like, I don't hold stocks through earnings, but this thing is, woo! That's one of the hottest charts in the market. IPOs, by the way, are hot. In 2020, the hottest stocks, so there's tech. Always think about themes. Tech is a theme, right? Big cap tech stocks. Apple, Tesla. Tech is a theme. The second theme that's been hot, that's been working, has been IPOs. Yes. Woo! Put this on your list. Oh, Joel, you know that regulations don't mean nothing. It's out there. It's happening. I see it. I'm out here in Destin, and it's like a beach town, so there's like a lot of flipping and stuff going on. Everybody puts like max 5% down. It's back, baby. The go-go days. This thing is hot. Keep it on your list. You know what? Somebody had mentioned Etsy. I actually think Etsy's going to be a long in a couple days, maybe at like 114 to 110. But probably a short for a little bit. The one that I think is a short on Monday, if it opens up strong, is this W. It's just started. So this thing was, anybody been on fucking Wayfair's website? Man, these guys are crushing it. I don't know what the heck, how many $2,000 love sacks you can sell, but this thing was $26. You got the $350. That's a 10x return. It's just starting to show signs of crack. You had a nice trend down on it. If this thing opens up strong on Monday, what I mean by open up strong is like you'll spike up at the open. If it opens up strong into a level of resistance, I'll look for a green to red move and try to short this piggy. And it is a pig. It's a bloated pig. So it's been an awesome run. No getting around it. But it's due to come back. If this thing loses like $300, you probably see a wipeout about 50 points in a few days. Like it's going to be hot. Oh, yeah. What do you think? You know it, baby. Let me see. BVPR. You know what? This thing is like probably not that extended just yet. Damn, this had a nice run into the close, huh? Yeah. It'll probably be a short at some point, but I don't know if it's a short like right now. Let it really push. In this market, like if you're gonna take a stock that's a short, you gotta really let it go parabolic. Like don't just come in hot on a stock thinking it's a short because it's been up a lot. These stocks, like they can really cook and book for a while. Cooking and booking, baby. Fiverr. Now this thing looks like it's got some more juice. If the market holds, You're right on the 20 SMA on this thing. You got yourself a nice trend line break that's setting up here. That could be a multi-day hold. Yeah. Hey, Aaron, what's up, baby? Good. So going back to just like routines, right? You want to run a 5-day sort, but then the next sort you want to run is like a 90-day sort. You want to know like what are the stocks that are up the most the last 90 days? Why? If you're a day trader, swing trader, and you want to trade trends, stocks that are in trends tend to stay in trends till a force greater than equal to is thrust upon it. So it's no different than any kind of physics. So you want to not just be trading these, but you want to mentally ingrain into your head what these kind of stocks do. So you want to go through this 90-day, like see this Rumble? That's incredible. This thing has doubled in like 5-6 days. You want, see this thing looks like a flag pattern. You're going to have some more runs. There's another flag pattern. Like you're going to have some runs on these kind of names, Shill. If you're a swing trader or a day trader, a majority of your trades should be in stocks that are in the top 100 of your 90-day sort scan. If you are making a bunch of trades that are not in the 90-day, and there's going to be some, like stocks like Cake and stuff like that are more bottoming patterns, you don't find those that often. But like a majority of them should be trend trades within your 90-day sort, because our business is to trade trends. Our business is to trade the best stocks. Our business is to always go that way. You always do long, Kunal, gotta flip. Jason, in our chat room, we do more shorts than probably longs for the most part. I would say 50-50. Ooh, see this one? This one is nice. You got breakout, pull back to support. Good. Always 90-day. You always want to do a 90-day sort. You have to. Because you need to know and understand what the top 100 stocks are. A majority, if you like say you're in my chat room, for example, how many times we traded OSTK in the last 90 days? 100, right? How many times we traded Shill in the last 90 days? 100? Like, I mean, I'm just making up a number, but every day, right? We've fucking taken these trades every day. How many times we trade a run? How many times we trade Tesla? How many times we trade this grow the last couple of weeks? If you're really being efficient with your money, you run that 90-day sort and always think like this NVAX, I've taken hundreds of trades in it since May. Hundreds, day trading it back and forth. That's where you want to really go with this. How many trades have we taken at FSLI, Mr. Hassman? Every day we trade it. If you want to be a good trader, your trade should be concentrated into this 90-day sort, because it's telling you that you're trading the best stocks, the most efficient stocks for money. Yes. LBGL, like same thing. And I would memorize these. Like you should know the top 100, like know their charts, know how they move, know when they're setting up, because that's where the real money's at. All right. Now let's open this thing up to some questions. We have Sunday class tomorrow. We do market class at 8 p.m. Eastern time. So I'll finish up, for everybody at 8. Good. Oh, man. All right. What do you guys got planned? It's fucking raining over here. I was planning on going on the boat today. That does not look like it's gonna happen. Hey, Rodney. Okay, so when you think about, good question, right? Think about any type of trade. Like, how would you look at a stock? When you look at a stock, every stock, you have to look at a stock like you're a lawyer. You're building a case. You're looking for pieces of evidence that align in your favor for a stock to be worthy of your time, worthy of your money. So you look for pieces of evidence in your favor. You're a lawyer. So think about it like this, Rodney. Every trade is a 50-50 shot. It's a coin flip. Heads or tails. You win or lose. Stocks go up, they go down. That's it, right? Win or lose. Stocks go up, they go down. It's a zero-sum game. So what you want to do is take that 50-50 shot and move the needle. How do you move it to 60-40? How do you move it to 70-30? The way you do it is by building a case, like you're a lawyer. So the first thing, so Rodney, and this is like a, like when I teach class, like we have a 90-day class. So it's not a 5-minute question, but this is how I would look at it if you want like the layman's terms, right? So first thing you want to always do is think about like, okay, what's my price pattern? There's 18 good price patterns out there that I think are worthy, right? But if it doesn't have a name, then it's not worth your time. So if you can't name me the pattern, then don't worry about it. So you want a price pattern. What I mean by price pattern is a flag pattern, flat top pattern, moving average pattern, VWAP pattern, so on and so forth. What's my price pattern? Number 2, what's my volume like? There's 2 different aspects of volume. Number 1, you're looking for liquidity. Does it have liquidity? So you need at least 1 million shares or more per day. 2, the other sneaky part of volume is accumulation, distribution patterns. What's my accumulation distribution pattern? Is the stock getting accumulated or is it getting distributed? If you've got a stock that is getting distributed, meaning like big money selling it, and the easiest way to look at this in layman's terms is like the days the stock goes down, is the volume bigger, the red days, is it bigger than the green days? That would tell you it's getting distributed. It's a longer subject then, but that's the easiest way I would kind of go about it. Good. 3, do my moving averages support the play? Right? So, you got curls for the girls. Curls for the girls coming up under the kitchen. 4, what are my stochastics looking like? Am I getting extreme overbought, oversold levels? 5, am I trading with the trend? Always a question to ask yourself. So this is your checklist. If you go through every single trade for the rest of your life with this checklist, you will make money. The problem is nobody's going to do it, right? You gotta fucking, this seems like a lot of work. Once you do it enough, though, you can do this. So like I can analyze this group of things in 1 second because I've done it so many times. In the beginning, it might take you 10 seconds, 15 seconds, and so you'll feel ponderous almost. It'll feel heavy, the routine of it, because you're going through a checklist. You're not working through intuition. You're working through, right, a checklist. Now, look, pilots, doctors, everybody works off a checklist. Once you do a checklist 1,000 times, 2,000 times, you won't be working off the checklist. The checklist becomes internal. Once it becomes internal, then you can call audibles. You can make addendums. You can, on the fly, according to market conditions, start to adjust. That's where true expertise lies. That's where true mastery of your craft lies. It's when you can go from working on the checklist to when you can call an audible on the fly and it actually works. Because when a new person, a novice, when you adhere to your checklist, you will make money. But if you call an audible and you break your checklist, you won't make money because you're new. You don't know when to do that. But over time, as you have repetitions, then you can adjust. You can change the scenarios around according to what's happening. And that's where you really want to get to. And so you've got to go off this checklist and you've got to keep hammering it till you get good. And then the last question is the juice worth the squeeze? That's the question you should always ask yourself in anything in life, but in trading, it is in trading. It's very, very important. Is the juice worth the squeeze? What does that mean? It's just your reward to risk, right? Like, I'm going to take a shot at this. Am I going to get paid for it? Is the juice worth the squeeze? Like, how many times we do stupid stuff and there's no reward on the other side of it, right? In life. You do stupid stuff all the time. How many times do you do it without any payback? All the time. So you always want to ask yourself, is the juice worth the squeeze? Well, maybe by juice worth the squeeze, can I risk $1 to make 3 or 4? Can I risk 50 cents to make, a buck or 2? If you do that over and over, you put yourself in asymmetric reward to risk scenarios, then you're gonna make money. You're gonna make a lot of money. But if you don't do it in that manner, then guess what? You're not gonna do it. So this is the checklist you really want to work on. If you can answer those questions on every single trade, then you're gonna make money. You're gonna make good money. But if you can't, then you're shit out of luck. Essentially is how it's gonna go. Does that make sense? I gotta get going. I got things to do. Well, I don't got things to do, but I gotta pretend like I got things to do. Now I got a couple of things I gotta do. If I could turn back time. Angel, liquid gainer scan. 100 times C minus C1 over CC1. Volume 1 million. Price over 5. I'm not like a big believer, like, you can, I just look at volume patterns in general, but like, I'm not dissecting the volume to see like, okay, what institution is buying this? Like, is it Citadel? Is it this? It doesn't really matter because, in this market, it's just, retail is also helping run the show. Alvarado, man, I appreciate it. Good. All right. Anybody got any questions? I apologize if I missed any. They come in fast. They come in quick. You know how it goes. You know it. You know it and you show it. Going once. Going twice. So, adios muchachos. Peace in the Middle East, my friends. Hey guys, if any of you guys have any questions, Hugh, I would probably say $500 a day till you get to about 40 and then go to 1,000. If you guys have any questions, if I missed anything, I apologize. They just come in so fast and, they don't you can't see the past ones. Email me. Hit me up. Kunal Bulls on Wall Street. You can text me 517-974-1480. Or just go on Bulls on Wall Street. My guy Kevin's always on this live chat. So yeah, if you go on the website, you ever just want to ask any questions or whatever, just you can go on Bulls on Wall Street. My boy Kevin's always on live chat. Yeah, he is. Well, it's my boy Omar right now, but Kevin's supposed to be on it, but you know how that goes.
It's on right here. It's active.
I'm running that chat. All right, later, Marv. I appreciate you guys. Love you guys. You know how it goes. We come in on Monday, we're going to shred. I'll see everybody in the chat room. I'll see everybody in class tomorrow. We got class at 6 p.m. Sunday's always 2 classes. 6 p.m. boot camp class. 8 p.m. Sunday huddle class. 2 classes. All right? And yes, you have to come to both. The reason we have 2 classes is because we got a lot of things to talk about. Cool. I'll see everybody in class. You know what we got to do, which is the do.